This is our first time home buyer seminar. I'm Bonita Wilson with eXp Realty, and let's go. Just a little bit about me. In order for you guys to really know, like, and trust me, you really need to know me. And so I'm going to give you a little bit about me so that you know who you're talking to and why you should listen to me in the first place. I am a New Orleans transplant. I moved to New Orleans circa 1997. I have 3 children and 3 grandchildren. I am a former special education teacher. I taught hearing impaired kids for 4 years, and I taught regular education children for 3. I'm a licensed attorney in both Louisiana and Texas. I've been an attorney for 21 years. I'm a realtor. I've been a realtor for 7 years and a broker for 2. I'm an associate broker with eXp Realty. I am a member of the Wolfpack, which is the fastest growing organization in eXp, and eXp is the fastest growing brokerage in the history of ever, guys. I specialize in mentoring and training new agents. I am a certified eXp mentor, and I am a top 3.5% influencer at eXp. So what are the benefits of home ownership? Why should you own a home? Well, first of all, you build equity and grow wealth. You build stability because you have predictability in home cost, whereas if you're renting, your rent can go up. You don't know what your expenses are going to be on a monthly basis. And there are tax benefits that you get from mortgages. You can write off your interest and things like that. I am not a tax attorney, so I'm not giving you tax advice here. And then you build a legacy. You have something to leave to your family. So here's the buyer's roadmap, and this is how the process that we're going to go through. The first thing that you need to do is meet with a real estate professional like me, and then the next thing you need to do is get pre-approved. And so this is where I'm going to have Michael come in and explain the pre-approval process.
I was actually an education major, elementary education. And I view what I do as knowledge is power and as education. I don't view as what I do as sales. That's not my approach at all. I'm not a salesperson. My job is to help clients achieve generational wealth. I know the power of that because I've been there as a first-time home buyer. And this was also before I was in the industry at all. And so I know what it's like to feel a little nervous about, okay, this is a big step. Also, I bought a double, so live on one side, rent the other. The landlord thing was new to me. I didn't know if it was too much for me. So I know what it's like to be there, but I know now that I have more equity in my home than I could ever put in a 401k or bank account in the same period of time, much less for decades. And that's what it all comes down to. So as far as pre-approval process, typically what will happen is Bonita will say, hey, I've spoke with so-and-so. They're interested in buying a home, kind of seeing what are some of the options out there. And what I like to do is this, rather than just here's the application link, go to it, 10 minutes, I much prefer to take a good, usually 15 minutes, maybe half an hour, as what officially would be called like a pre-qualification call. It's just talking through things, trying to understand, okay, what are you looking to do? What parish are you thinking? Is this a multi-unit? Is this with a co-signer? What monthly note are you trying to hit? And then from that point, we can actually talk through the big 3 of credit, buying power, funds to close. Almost everybody knows that the credit scores will matter for loan type or eligibility, but the thing that most people don't necessarily know is their max isn't, as a home buyer, it's not just what you want it to be, it's a set percentage of your gross income that each of these loan products will allow you to go up to, minus existing bills. So everybody's buying power is different because everybody's income and everybody's bills are different and for what they want the note to be. So we'll talk through all that, confirm that there's, and this is just verbal, just talking numbers, confirm that there is X amount of money in the bank for down payment if applicable, and if not, then to see if gift funds are an option or even liquid 401k. And if all that sounds good from the pre-qualification, next step is application. That's then when we're moving to the pre-approval stuff. Application can be done via website or an app. It's a very user-friendly, intuitive, basically 10 minutes. Mostly it's 2 years of employment history, 2 years residential history, government questions, and there you go. This was already starting to be the case even before COVID, and now definitely. I almost used to meet with everybody face-to-face in the office, and we would just do the application face-to-face, and then the rare ones would happen by phone. At this point, application is done almost entirely via link, and I don't meet buyers until closing when it comes down to it. And that seems to be even before COVID, cross-generationally, everybody just came to prefer to just do the application via link. Maybe because you can do it in bits and pieces in your own time if you wish. Maybe because the comfortability level, whatever it is, that's generally what happens. At the end of that, then they're essentially home buyer is setting up a loan portal, and I in the email that has the application link, I include a list of documents needed. And those then can be uploaded as PDFs in the loan portal. For most buyers, they will be just simply these. And again, this is how straightforward it is. We don't even have to go that deep. So number one, driver's license, passport is fine too. Number two, a month of pay stubs. Number three, 2 months of bank statements, all pages, for any funds used for down payment or the funds to close. And then number four, the last 2 years of W-2s. We don't, in most cases, even need tax returns. For self-employed borrowers, yes. For a borrower who has an existing home that we're using rental income, yes, tax returns. But in most cases, W-2s will suffice. The application piece of this is so straightforward that and simple to work with that if the buyer is comfortable, you can even go in for your payroll if it's somebody like ADP or the bigger ones, or pretty much any bank or credit union in the country, and you don't even have to upload. You can actually log into those accounts via the loan portal and literally import your documents, as part of that. So you don't have to even have a separate document that you upload to it. So it's that easy. And for those who aren't necessarily maybe tech savvy or comfortable with either of those, then it's just simply either number one, email those back to me as attachments, or if even that is too much, then they can be brought by the office and we can scan and do them that way. That's a rare case, that comes up anymore. What I do then at that point is I review the application, make sure if there's anything to be adjusted, modified, pull credit, communicate to the borrower not only what credit score was. Middle score is always the one we use. So TransUnion, Equifax, Experian, these are FICO scores. Middle is usable. If two borrowers are on the loan, then the lower of the two is the one that we're required to use for that. And then basically I go through everything that was provided document-wise and just check it out. Okay, driver's license for ID, W-2s, what are the amounts? So if an underwriter says, hey, so-and-so makes this amount per hour, they've been at their job for 5 years, but why in 2021 was their W-2 amount lower? Because that would suggest a different, just to try to look for any hiccups down the line to clarify those up front so we don't have an issue when under process, when the clock's ticking for the contract. And so I clarify any of those with the buyer. Then at that point, once everything is good to go, I run the pre-approval digitally. So there's no guessing game to this. This is a digital national program in the system that's running the software. And from that point, I just take the pre-approval to the max that either the numbers allow for the buying power, or if it's a case where buyer says, you know what, I have this amount for down payment, that might be the max based on what the down payment percentage is. So whichever that is, I run that, and then both Bonita and home buyer are contacted and provided a letter basically as a guide to say, this is your max. This is the max sales price. This is the loan product or loan products if there's a couple. Little things to know, like to make sure Bonita knows, hey, we're going to need closing costs covered. We might need some of those. We're good on what's in the bank. So maybe negotiate on sales price rather than closing costs can be the way to go, to just keep everybody in the loop from those things that were going on as part of the pre-approval process. The new thing that we've added, this is at Eustace. So I'm with Eustace Mortgage, private lender in New Orleans for about 65 years. This, by the way, compared to most private lenders and other industry people out there who are made up of banking people, or banking people started the private lenders. Eustace was started by loan officers. So even to this day, the company, which I love this because we've been with them just a year, Eustace is very production oriented. The underwriters work with us. It's not, in some cases, underwriting can almost feel adversarial, like they're doing anything to say no. The Eustace underwriters definitely work with us to make deals happen. I can upfront any questions that I might have to say, is this going to work or not? I can consult with an underwriter to find out if there's any issues, various scenarios. So that's all great. One of the things that we have just unveiled for the first of the year and is already going into effect is this. It had been last year a very strong seller's market because the interest rates were so low and there were more buyers than usual out there and maybe less homes for sale. So it made a very competitive market. You could put an offer up and have a lot of other people you're going against. So one way as we're going into this year to make that less likely to happen for buyers that Bonita and I are working with will be this, is after the pre-approval is set, any home buyers, you're good to go. You're fine for home shopping. You can go out there and make offers, no problem. You are solid. This was not just based on a phone call. It wasn't based on just you do an application. It was a full pre-approval. But for those who say, you know what, I have a little bit of time, I've got a couple extra days on this, what we're doing as the next step is an actual approval. The same type of approval that happens when actually under contract. So essentially we're taking a piece of the loan process that happens when under contract and taking that back to the beginning before going under contract. Why are we doing that? Number one, it makes offers much more likely to be accepted because once, and this is my part of this, to make sure that I'm communicating something to the listing agent to say, hey, because the letter itself will not at this point look any different, to just say, guess what? We have an actual approved buyer by an underwriter. And as long as appraisal and title are clean, we're good to go. And when those come in after the inspection period, then we're ready to submit the file for clear to close. So that due diligence has already happened. That just doesn't really occur. So unless a cash buyer, then that should put any buyers right to the front of the line. The other part is since we've done some of the processing and underwriting of parts on this upfront, that means the loan process doesn't need to be typically a month contract. So we can actually say, hey, we can do a 3-week contract, which is another reason that the seller is more likely to say, well, yes, of course, because if you have a solid buyer and we don't need as much time, that means they can sell their house and get the proceeds a lot quicker. And also they don't have to worry about, once the file starts in-house with lender, that something's going to fall apart because the loan officer didn't do their due diligence up front. This is going beyond what I was already doing to, again, an actual underwriter signing off on the loan. So I'm really excited about that. These are, this has just begun over the last month. So these are all just starting to show up, for buyers. But once we move out of the first few months of the year, get past Mardi Gras, hit the spring, I think these will be even more important to have buyers that are much stronger than anybody else. If I were a home buyer and I heard this and knew that, okay, the big company with all the ads that I'm not going to speak of, who basically gives people letters based on a phone call, sometimes they don't even pull credit. A lot of times they don't even review documents. They just take it on a verbal. And actually, side note, but not side note, why does that matter if somebody tells you can buy a house when they haven't even done due diligence to review documents? Because as a home buyer, potential home buyer, there are a lot of things that you don't know because it's not your job on the guidelines. You may say, well, you know what? I got this job, I got a solid base pay, and I'm getting all this OT. So man, look what I can buy because I'm getting all this overtime on top of it. But, and this is ripped from the headlines from just yesterday, but the overtime, if less than 2 years, we can't use it. So I had somebody yesterday, good job, good overtime, but they've only been getting it 6 months. So in the buyer's mind, well, I can buy this, this, and this. But in actuality, 6 months of overtime means that me and anybody in the country is limited to using the base pay. That's why it matters when lenders, specifically the big national one with all the ads that rhymes with Wiccan, it matters when they do not do proper pre-approve, because that's why deals fall out. So what we're saying is, not only were we doing things solid before, we're going above and beyond to get buyers under contract. Right. So yeah, I'm really excited for that.
That's really a game changer, Michael, because I'm gonna just tell you, I put a listing live last night and within minutes I was getting calls. An agent called me, she was like, we want to put in an offer. We don't even want to see it because it is a competitive market. I said, well, the house is vacant. Go see it before you submit the offer. The offer came in $30,000 above asking. Really, other than appraisal, no contingencies, really short due diligence period. The closing date that they set is just about a month and a week. And we have 13 more showings today. If something came in like from you that said 3 weeks, my seller who's already moved and is ready to move on, that's going to be very, very attractive. And especially when it comes with a call from you that says, hey, look, this is good. It's solid. We're good to go. There's no way this is going to fall apart unless the buyer goes buy a new car or something else happens. That's really, really a game changer. And I'm so excited about that program.
Yeah, I am too. I mean, I think that what helps too is people in this area know of Eustace Mortgage. So it's not an unheard of company that's actually doing this. So that, to me, for business where there are so many different dynamics of an offer being accepted, name and reputation is everything. Essentially, a fast track, something that you can bank on is huge.
Right.
So because think of it on your end and on my end, just for our parts in this, I can pre-approve clients all day, but if they don't go under contract, then the pre-approval means nothing unless you close. Right. It really doesn't. It's like the interest rate means nothing if it doesn't apply to a house. Right. So if the interest rate is 0 or 100, it doesn't matter if there's no closing. And for you, for showings and everything else, what I feel like this will make also our jobs more efficient, to make a much higher percentage of accepted offers.
Right.
So yeah.
Okay, cool. Alrighty. So I'm gonna reshare my screen. So once you meet with me and then you meet with Michael and you get pre-approved, then guess what? We get to go shopping. Okay. This is where you already know what your buying power is. And as Michael said, it's really important to get pre-approved on the front end, because if I take you out and you're looking at houses and you haven't gotten that pre-approval, let's say, for example, you want to see $300,000 houses and I'm showing you $300,000 houses and your pre-approval comes back at $200,000. There is no $200,000 house that I can show you that's ever going to be good enough. So it really does you a disservice to show you houses before you're pre-approved. So it's really important that you get in touch with Michael as soon as possible. And then we make the offer once we find something, and then we do our negotiations. It's a very, very competitive market. A lot of contracts are coming in, multiple offers. So it's really important to have a strong negotiator negotiating on your behalf. And then we go under contract. And then once we go under contract, we do our due diligence. And there are other steps that I'll get into a little later in the presentation, but we'll get the final details and I'll get into that in just a second. And then we hit the closing table. So,
Bonita,
yeah.
could I interject something as far as going under contract, just as far as kind of costs incurred and things like that? So, because one question I'm typically asked is how much does this cost up front? You know, what do I need to expect? So on each of these loans, there is typically a down payment. They're flat amounts. Conventional for first-time home buyer is typically 3%. Second-time home buyer 5%. These are for single-family homes. It does jump to 15% for a double, which is why most people will buy a double with FHA, which is 3.5% across the board from a single-family home up to a fourplex. Right. Once you get to 5, that's commercial. So we're talking solely residential here. VA for any veterans or National Guard active clients who've been in 6 years is 0 down payment. USDA RD rural development loan is also 0 down payment. As far as different programs, down payment assistance, it'll depend kind of parish by parish. I will say the CAFA program that's available in, at this point, pretty much every parish except Orleans because of Fano existing. Every parish going all the way up pretty much to Baton Rouge. It was when they had the real bad flood a few years ago in Baton Rouge, the summer flood. It was their program that got extended to basically help out buyers who got nailed by that storm, even south of Baton Rouge. So, it's been continuing to expand out here. That would probably be, in my view, one of the better assistance programs. Reason for that is this. I'm going to generalize. Soft second programs typically are such that the income limits are very low, such that if you hit the income limit, you don't have enough buying power to buy in New Orleans, for example. They're also involved very much with the parish. You have to, if you have inspections with Bonita, you also have to have inspections with the city and things like that. So number one, it's very difficult to qualify. If you do qualify, frankly, a lot of listing agents do not want to accept the offers because they know that it's a very difficult, much longer, 2 to 3 months at best, even if it closes process. And then you have to be in the home for so many years. And if you want to sell it, rent it, whatever, and they find out, you got to pay the money back. So the CAFA program is much better. Income limit is significantly higher. It's basically a modified conventional loan, is what it is. And it has lower PMI. It's just a better program all the way around. So that would be the one. Unfortunately, that's not available in Orleans Parish at this point. I know Fano was looking at essentially maybe taking that on, but at this point, I don't think that's really budged at all when it comes down to it. So getting back to the money thing, on my end, I don't charge an application fee. I don't charge a dime for doing what I do. In fact, for what I do, like Bonita, I'm paid fully commission. I don't get paid until we go to the closing table, and I don't charge anything for my work until we get to the closing table. When you go under contract, though, you will have what's called an earnest money deposit, and essentially that's skin in the game money to say, hey, on the seller's part, we know that you're serious, and either they cash it, but you can get the money back if there's an issue with inspections, for example, or they'll hold that deposit check until the closing table. I would say most, Bonita, correct me if I'm wrong, I would say in most cases, that's about $1,000. Sometimes 2, maybe if it's a higher priced home, but usually that's sometimes 500, but usually about 1,000. And just know that's a portion of the down payment itself. So the second cost you incur is with Bonita for inspections, which you mentioned. And then the third is for the appraisal being paid up front. For your deposit and for your appraisal, you are credited for that to reduce your down payment at the closing table. And after those things, you don't pay a dime until you go to closing. Know that the seller can't cover your down payment, but the seller, as part of negotiations, can cover your closing costs. On FHA, they can do that entirely. It's a higher percentage. On conventional, usually they can come pretty close, but not quite everything. And on VA and RD, typically they can cover everything on that. So how much money do you need up front to buy a home? You're definitely going to need your deposit. You're definitely going to need inspection money, appraisal money, but also know that an underwriter is upfront ideally before you even go under contract. And if not, if we do an offer based on the regular pre-approval, then within, let's say, a week to 2 weeks after going under contract, an underwriter is going to be reviewing the file. So the money needs to either be in the bank by that point. Let me step back. Money needs to be seasoned in an account for 2 months. But if additional payroll is coming in to hit a certain target, that needs to be there by the time the files go into underwriting, or gift funds from family need to be available and in effect for that. And Bonita, I apologize. I know I'm going all over the place, but
Oh, that's okay.
money is the through line on this one.
And we're going to get to that a little further in the presentation, but I'm glad you said that, because right now, typically before this whole seller's market thing, we could get away with $500 or $1,000 at a down payment. Right now, typically, my buyers are putting down 1% to 2% of the sales price. I've gotten offers with as much as 10%. And honestly, the last 2 buyers that I worked with that, we really wanted to come in strong. So they put in offers at $5,000. So if this is a market where you have to really pull out all the guns and put your best foot forward and make the strongest offer possible. And so if I know, like I'm working with you and I know we're going to get to the closing table, I don't have a problem telling my clients, let's go in real high on the deposit, because if something happens, I got you protected in the contract. We have our due diligence period. We have our appraisal contingency. And so we have mechanisms to protect that deposit. And so we actually have won all those offers where we come in really high. But like I said, typically, if you have a buyer that doesn't have that type of cash reserves, then 1% to 2% is pretty much standard right now in this market. Mm-hmm. I anticipate maybe, soon we might go back down to the $500 or $1,000 deposit. Okay. So are you ready to buy? And Michael has covered a lot of my presentation, so I might just go real quick. You need a steady income. You need a low to medium debt. You need cash for your down payment in your closing. You need 2 months of bank statements or pay stubs. And then 2 years with the same company or the same industry. And is that with your company as well, Michael?
You know what? Typically so. But it doesn't necessarily need to be same industry. It just, as long as there's a general job history. Mm-hmm. One great exception for that is recent college graduates, right. or anyone in the military. Okay. So meaning if someone, military veteran who has, and I had a young man who did this recently in Slidell, got out of the military, discharge, and what he was doing in the military, all of a sudden he starts working for Boeing doing the same job. 2 months later, and we were able to use his military background as that 2-year job history, even though he was new on the job. So same thing for students. As long as you have a new position in the same field of study, we can use college transcripts to cover that 2-year period. So those are the 2 big exceptions, but those are great exceptions because a lot of graduates think they have to wait for a 2-year history. But you definitely don't. Like Xavier pharmacy students are perfect on that, because do they have student loans? Yes. Are they making 6 figures right out of the gate? Yes. And that helps, the one really helps, balance the other out. So that as much as anything for, recent alumni, that's a way to get in on that. And thinking on the other side of it for the 2 years, temp agencies are typically kind of a no-no. For the history background or present income, because it's not necessarily guaranteed going forward. Let's see what else. This is something that's been coming up more and more, is traveling nurses. Mm-hmm. So, typically you have a background as an RN, and then you're in as a traveling nurse. Most companies out there require a year of traveling nurse income since it's variable. We're able to do that based off of 6 months income, and that's big. And then also because of enough of the productions here is TV and movie, we can also do loans for those individuals. It's almost like a modified self-employment W-2 kind of thing, because somebody might be over the course of a year working on, let's say, 3 to 4 different jobs for different movie or TV shoots. Mm-hmm. So we figured out a way that works with the Fannie, Freddie, and HUD guidelines, but also we can properly show that income and make those work. So I have plenty of clients, whether in different aspects of TV and film production on that. But one way or the other, there has to be a 2-year history. Bonita, I guess to mention lastly, because of COVID, or if there was a job gap, of some sort is typically what an underwriter will say. If there's a reasonable job gap, they'll say, okay, then we're looking at the income right here, right now, but we'll want to see 2 years prior to the job gap. So one way or the other, see what I mean? One way or the other, they're going to want to look at that. And if someone was off of work due to COVID, that's not necessarily any kind of issue at all, because obviously we know that. And then last thing is maternity leave for everybody out there, men and women. Maternity leave is not a job gap. It is illegal to discriminate and call a job gap if you are away from work for a maternity leave. That doesn't count. So an underwriter might want to see 2 years prior to that, but that is no job gap. That can't be used against a home buyer in any way whatsoever.
Oh, that's amazing. So getting pre-approved, choosing a lender, obviously Michael, and he's gone through this already. So I'm just gonna whip right on through this. And then he talked about this as well. So I'll go through that. Agency relationships, basically, I'm sorry, guys. We would have an agency relationship. Basically, I owe you a duty of loyalty, honesty, and fairness. And if you are required to sign a buyer loyalty agreement with me, I will give you 150% of my loyalty. And so what we would expect that you would do the same thing for us. And then we'll get started on your home search. Understanding what you're looking for is a top priority. So let's talk about some of the features. Location, location, location is the key. You can have the most beautiful home in the world, but if it's in a place where you're not comfortable living, then that's not going to be a viable option for you. So we work very, very hard to understand your needs. What your price point is, which we would get from Michael, how big a house you want, how many bedrooms, how many baths, and, communication is the key. You need to let us know, which is why we spend a whole lot of time on the front end talking about what you want. And when we go and look at a house and you say, hey, I don't really like that house. I don't like that ugly brown paint or whatever, then I'll never show you a house that looks like that house again. So communication is key. You're not going to hurt my feelings. You need to let me know what you want. And if I'm doing my job correctly, then I should be able to show you the house of your dreams. Okay. But it's going to be based upon what you tell me and what we communicate. We want to know about baths. We want to know about style. We want to know about any features. If you have kids and you want to be near schools, we need to know all of that information. Search tools. Okay, so as an agent, we can search the MLS. We have an agent network, and I have an IDX website that you can search on. As a customer, as a matter of fact, there's a customer on the phone that found me through her Google search. If you're driving by and you see a yard sign, it may say for sale by owner, give us a call, because our fee is free as well. So we don't get paid. Michael mentioned this. We don't get paid until we get you to the closing table, and our fee is paid by the seller. So if you see a for sale by owner sign in the yard, give me a call. I'll arrange a showing and we can work through this deal, and the seller will pay our commission. If you go to an open house and I'm not with you, for instance, just let me know and I will give you an open house guest pass that you can give to the agent that's there on site, because you have to remember the agent that is there works for the seller. They don't work for you. And the same thing for model homes, new construction, or friends. And I also have an automated home search system on my website as well that you're welcome to use. Okay, so once we find a house, we have to make an offer. You're going to fall in love with this home, but I'm just going to tell you, it is a very competitive market. And it's unless we come in strong and hard, like with Michael's program for the 3 weeks. That's awesome. I'm so excited about that. Try not to get too attached to the home, but we have been very successful at getting our buyers' offers won. So I'm going to help you with the pricing. I'm going to prepare the offer. I will present and negotiate on your behalf, and I will get you under contract. Within that contract, we're going to talk with Michael and find out what the down payment is and the finance amount that will go in the contract as well. All important dates will be in the contract. Excuse me. We have deadlines for when we have to produce an intent to proceed letter. We have deadlines that you have a certain amount of time to go and look at the property, which we call a due diligence period, to make sure that the home is sound. We have appraisal deadlines. So all those important dates will go into the contract, as well as the contingencies that we just talked about. And then your offer is either going to be accepted, it's going to be rejected, or the seller can come back and counter and say, hey, well, I don't agree with what you're proposing, but this is what I would accept. Home purchase types, there are single family homes, detached homes, attached homes, condos, townhouses, duplex, triplex, and fourplex. And Michael already touched on this. You can buy a house with up to 4 units and still be considered residential. Once you get to 5 units, it's commercial. And then the type of home sales, there are standard home sales, which is generally what we do, but there are foreclosures and short sales and auctions out there as well. Once your offer is accepted, you'll give your earnest money to the title company, which we already talked about, which is generally 1 to 2% of the sales price. And then we get into inspections and repairs. And inspections are for major items only, guys. So we're talking about plumbing, AC, heat, electrical wiring, the roof, foundation, those types of issues. The inspections are not for there's a small chip in the paint or the electrical outlet cover is missing or anything like that. We don't really want to bombard the seller with requesting trivial repairs, but I will walk you through that entire process and get you through that as well. And then once we get through the inspection period, we'll go back and forth with the seller. The seller can say, okay, I'll fix everything that you want me to fix. Or the seller may say, I'm not going to fix anything, take it as is or leave it. Or you can negotiate somewhere in between. But once we get through that period, then we have the appraisal. The appraisal will come in. We have appraisal contingency in the contract that protects you. So if we offer to buy the house for say $200,000, and the appraisal comes in at 190, then the seller, we would present a low appraisal letter to the seller, and then the seller has an option to either say, hey, I'll reduce my price to the 190, or the seller may say, no, I'm not going to reduce my price, or the seller may say, let's negotiate somewhere in between, in which case you would have to make up the appraisal gap because the lender's not going to lend you more on that house than it appraises for, okay? And then we have to get your home insurance covered. We'll finalize any mortgage details with Michael. We'll go through the final walkthrough. We have up to 5 days before closing to do that, and then we go to closing. During the transaction, I or your realtor, if you don't choose me, because I do have some other realtors on the phone that are awesome, we maintain and monitor all the dates. We coordinate and attend the inspections. The way I do my inspections is I will show up at the beginning of the inspection and I stay the entire time. Then I'll just tell you to come like the last half hour or so that you can get it straight from the horse's mouth. The inspector's there to explain everything that he found with you, and we can go through that. And so we're not just getting a blind report. Also, your agent will communicate with you. We communicate with the lender. Michael and I talk all the time. I communicate with the other agents, and we communicate with the title company. Closing cost breakdown, Michael's already covered this. So you have your appraisal, your inspections, your process, and he talked about some of these fees that he waives as well, but these are standard fees across all lenders. Recording fee, discount fees, settlement offer fees, title insurance, doc prep, escrow taxes and insurance, prepaid interest, credit report, transfer taxes, and notary fee. Then we get to closing day. This is the big day. I go over the documents with the title attorney there. I'm watching and making sure that what you're signing is what you agreed to sign. Michael's there to make sure you're protected on the lender's side. I'm there to make sure that everything that we agreed to in that contract is what you're getting at that closing table. You need to bring with you identification, and it needs to be government issued, a driver's license or passport or a state issued ID. And then everybody that's purchasing the property has to be there. If somebody can't be there, like we have some offshore buyers or traveling nurses and things like that, then we have mechanisms to put in place called powers of attorney, but we need to know in advance. We can't find that out the day of closing. So if you know that someone else is going to be on the loan with you and they can't be there, you need to let us know. And then if you have to bring funds to the table, you need to bring a certified check or you need to wire that money in advance. And then your total monthly mortgage is going to consist of your principal, interest, real estate tax, home insurance, private mortgage insurance, if applicable. This is my contact information. My phone number is my personal cell phone number. I only have one cell phone. You can call me anytime. That's my email. This is my YouTube channel. If you want to check out what I do for my clients on YouTube, you're welcome to do that. And this is how you reach me on social media. And Michael, if you want to drop it in the chat, your contact information.
My contact is 504-390-4217. My email is m.sell@eustismortgage.com, EUSTIS, MORTGAGE. And on socials, IG and Facebook, is simply my full name with middle is Michael Allen Sell.
Okay.
One thing to add, because this is probably a question I get more from anyone, buyers and agents, is what are credit scores for loan types? FHA is the most lenient. FHA will let you go down, typically down to 620. Just know though, higher is better for a lower interest rate. Higher is always better. But conventional has gotten, due to COVID, a little less hard to get your hands around what's the minimum score. It used to be probably the maybe even mid to lower 600s would work on conventional. Due to COVID, I would say upper 600s at the low. But here would be the thing. In most cases, if below 700, buyers typically go FHA. If above 700, as long as it's not a multi-unit, there's enough buying power, etc., we'll usually go conventional. The reason is on a conventional loan, which is just Fannie Mae, Freddie Mac, private investors, the credit score will greatly impact the interest rate and the mortgage insurance. That's less so on FHA. So if you're at, say, 680 compared to 720, then it's probably going to cost you $100 to maybe $200 less for your monthly note to go FHA compared to conventional. That's the reason why. And you can always refinance later on to go from one to the other. Credit scores for USDA RD is typically 660, but they're also a little hard to get your hand around on that. So again, higher better. VA is the lower 600s, usually 620, 640. But one great thing about VA loans is not just zero down payment, but they're also way more flexible on credit scores and buying power on debt to income ratio as well.
Michael, do you have time for some Q&A?
Yeah, absolutely.
Okay. The first question I have is that we can actually go ahead and put that 3-week time frame on the contract, correct?
Absolutely. Yeah. As long as this is a buyer that has been approved. And I would be communicating with you, number one, when they've been pre-approved. And then once that approval happens, then you definitely get the word out for sure.
Perfect. Great. Okay. Does anybody else have any questions for Michael or me? Okay. Well, look, we have some prizes. So Rita has won the first person to show up prize. And then I have a prize from Mona who stayed till the end. This is I stayed till the end prize. And Michael, I really want to thank you so much for your time. This has been very, very informative. I'm so excited about this new program that you have. Let me check and make sure. Rita says, I love all the information. There's a thank you. Yeah, thank you so much. I appreciate you coming out on a Saturday morning to do this for me. And I look so forward to talking to you later on today, because I do have a couple of referrals for you as well.
Yeah, that sounds great. I appreciate the invite. And so I can direct anyone to your YouTube channel, correct? This will go right.
I can direct anybody to go there. I do home property tours. I have buyer tips. I have everything on there. So now I'm up to 3 videos a week. So if they subscribe to my channel, then they would be the first ones to get notified when I put out new information. I cover buyers and sellers information. You know, I have the best reasons to move to New Orleans, the worst reasons to move to New Orleans. But you know, you got to give the good and the bad. And like Michael said, we are not salesperson, guys. I'm a consultant. Michael's a consultant. Our job is to give you all the information that is available to you for you to make an informed decision. So we will never, ever, ever sell you anything. So thank you, Rita. Thank you, Tammy. Thank you, Mona. Thank you, Michael, for coming today. I really appreciate you guys' time. And I will be calling you soon.
Good. Have a great day, everybody.
All right. Thank you, guys. Talk to you later.